We're debunking the real estate bubble myth. Good evening and thank you very much for joining us. This is the Trading Bell. My name is O'Brien Kimani. Later on, I'll be joined by Kenneth Masika. He's the Chief Executive Officer of Stanlib Fahari REIT. He'll be helping us understand why they are banking on the real estate to drive growth. And of course, Kasem Bao is a research analyst at Dyer and Blair. He'll be helping us to know where are the figures going and where you need to place your bet. This is the Trading Bell. We're coming to you from the trading floor of Nairobi Securities Exchange. Let's go to Kenneth Masika. Ken, yes, thank you very much. It's nice for you to join us on the Trading Bell. Thank you. Pleasure to take your position. Thank you. So, Ken, thank you very much indeed for joining us here. I mean, for 19 months, you have operated on the REIT market. What would you say has been the biggest achievement for Stanlib Fahari REIT?
Thank you, Kimani. I think in the months that we've been here, which has been 13 months since we listed in November 2015, we came to the listing of an IPO where we raised 3.6 billion shillings. Out of the 3.6 billion, we invested in 3 seed properties, namely Greenspan out in Donholm, and 2 smaller properties that are commercial, come light industrial. Those were bought at a consolidated total price of 2.4 billion, with the balance of the money being invested in fixed deposit, government securities, near liquid instruments. Given now that we've been there for 13 months, what we've done, we've invested the properties into the REIT, and during that time we're able to generate a profit of 106 million shillings over the 13 months. Out of the 106 million shillings, 98 million was distributable profits, which we were able to declare a distribution. We were able to pay the unit holders 50 cents per unit. The law stipulates that we must distribute a minimum of 80% of the income that we get. The distribution worked up at just over 90%, about 92% of the distributable earnings.
And since November last year, what would you say are the advantages of being on the REIT market as opposed to any other investment platform?
The 2 large advantages for being on the REIT market, number one is that it is a regulated investment vehicle, regulated by the CMA. We've also got a trustee who looks out for the best interest of the unit holder. So it is a very transparent investment vehicle. The second large advantage is that it is tax exempt. All income that comes to the REIT is exempt from taxes, and the unit holder only pays a withholding tax on the distribution that they get. For this year, we are pushing to have stamp duty on commercial assets bought by the REIT being exempt. We're also working on VAT and a few of other tax advantages, but the big issue is that it is tax exempt and a very tax efficient vehicle to invest in.
And so far you're the only REIT listed company in the region. Actually, why do you think companies are taking too long to realize the advantages of being listed on this segment of the market?
I believe when anything is new, a new product to take time to get traction. We have heard that there are people who are looking at getting into the market, but I guess they're looking at us to see what happens. The law is new. We are the first income REIT in the market, so I think there's a bit of a wait and see scenario going on there. But I would imagine now that we were able to complete a year, generate a profit and give a dividend, I think that goes to show that this is a concept that works. Secondly, I think what also has kept people, I think, a little bit at bay is that it is a very onerous undertaking, both in terms of the documentation and the legal thresholds that you need to meet, and it is a relatively expensive undertaking to bring a REIT into the market. So I think that has had a bit of an impact to the number of REITs, but when we engage with the other market players and regulators, NSC and the rest, there are people considering coming into the market. So I would imagine another year, couple of years, you will be seeing more REITs.
All right. And in terms of greenfield investments, do we have more malls or residential space in the pipeline?
I think what we're doing is when we came into the market, the CMA gave us approval to raise 12.5 billion shillings, of which we were able to raise 3.6. So we're looking at coming into the market towards the latter end of this year. The timing is still being worked on. Obviously, with this being an election year, that tends to impact on some of these things. But we're looking to come back into the market to fundraise for the balance of the 9 billion. Our main aim for that is obviously with our 3 seed properties. You'll find that Donholm the Greenspan Mall is a significant asset. So you'll find we're invested 68% in retail. Now, for the REIT, we operate in 3 main sectors: retail, hospitality, residential, commercial, and light industrial. So what we are looking at, once we do the fundraising, we're looking at diversifying the REIT, not only in terms of location, but also in terms of the sectors that we operate in.
Will you be going to the market to seek the 9 billion shillings or a portion of it?
The way we are at the moment, what we would like to do is, if the market dynamics are correct, we would like to seek the 9, but we are working on the modalities of it, and that we're consulting with our lead advisor. It's something that's actually in the pipeline at the moment. But what we would like to do with that is probably get in some more hospitality into it, some light industrial, some commercial office spaces, try and get them in. As we speak now, we are more to the east of Nairobi. We are looking at perhaps getting something to the west and spread it out regionally within the town. But to coming up to in the very, very near future, the law stipulates that after 2 years of fundraising, you need to be invested at least 75% into property. At the moment, we are at 67, 68, somewhere around there. So what we are looking at is we've got a pipeline of properties that we are evaluating now with a view to making an acquisition. So we should be making an announcement in the near future, because we have to have that property vested in the REIT by September 30th.
What kind of announcement are we expecting from you?
We are looking at getting a quality asset that will add into the income, so that people can see that also we are scaling up the REIT as well and then increasing the profile.
Have you identified this?
We have got several properties that we are looking at, and we are at quite an advanced stage of looking at them. And now obviously we're doing our due diligence. You know that there has been issues here with property in terms of, sanctity of title and the rest of it. So one does need to do quite a thorough due diligence, which is what we are going through now.
And as we come to the end of this interview, I also want to find out from you, we have seen, most of real estate companies, focusing so much on Nairobi at the expense of other emerging towns like Nanyuki, Embu, Nakuru and Northeast. Do you have your eyes trained outside the city?
Yes, we do. The way the law is structured now, the only place we are only allowed to operate in Kenya. And what we are looking at is a yield. It's pretty much a yield game. So we are looking at some assets in some of the other towns outside, especially, that is something that you cannot ignore, given that now we've gone into a county system. So some of these towns are coming up with quite some good properties. So if the properties meet our strategic plan, which we've got in place, and the yields are correct and the price is right, we are definitely looking at them.
Ken, I want you to focus on this camera, and because I know there are people who are watching and asking themselves, is this the right place for me to be and join Stanlib? I want you to focus on them and tell them whether this is a place where this should be.
Yes, the Fahari I-REIT is where you should be. We are the only income REIT in the region. We are looking at quality assets. The income is underpinned by long-term commercial leases with escalations every year or every 2 years. So you've got a guaranteed income that will be growing. We are also regulated, so your income and your investment is very secure.
Good.
Thank you.
Ken, thank you very much indeed for joining us here.
A pleasure to be here.
Kenneth Masika is the CEO of Stanlib Fahari REIT, joining us here on the Trading Bell to help us understand the benefits of being on this segment of the market. You're watching the Trading Bell. You don't need to go in. Well, we are back shortly with more. Stay right here. National Bank of Kenya being the top gainer in the week under review, and Kenya Airways being the top loser in the week under review. Kasem Bao is a research analyst at Dye & Blair, joining us here. Can you explain to us, National Bank being the top mover, of course moving by a huge margin of 33, would I even say that 3.09%. What does KCB has to do with this?
There has been news in the market over the past week that KCB wanted to acquire National Bank through a share swap, and also the issues of undercapitalization in terms of liquidity and receiving money from NSSF has actually boosted National Bank's liquidity base. That has consequently led to improved expectations from investors. That is why you would see that there has been a lot of activity in the bank itself.
What if these discussions, come to pass? What would happen?
There would be possible gains from synergies to KCB, especially in terms of the loan book size, enabling them to access also part of the market share that National Bank has in the disciplined forces and the teachers sector. But National Bank has actually lost part of that market share to Cooperative Bank, but KCB would be better positioned to now regain some of it. Yeah.
Would you say that National Bank is a good asset for KCB to acquire?
My view would have been that KCB would have had a better chance acquiring Chase Bank. It would have helped them penetrate the millennials and also the middle class sector and also the SMEs. But for National Bank itself, if KCB gets the single treasury account, it will then be a very good acquisition for them. Yeah.
Well, and let's talk about Kenya Airways. They have also been in the news. Why are they losing?
I'd say Kenya Airways is facing some turbulent headwinds over the past week, especially with the government changing its debt into equity. Equity investors are going to face some significant dilution coming in the next 6 or so months. Also, the banks that have converted their debt into equity itself, that's also going to affect the investors themselves. However, on the flip side is, with the government and the banks being more involved in terms of an equity holding, then they would have more push so that they can ensure that Kenya Airways actually turns around.
And what is happening to Mumias, actually?
Mumias, there was a story about them receiving more funds from the government as part of the bailout program, and I think that's what has helped push Mumias from the 0.75, the lows that we had seen, up to 1.15 currently. That's part of the people who are taking profit from the trades that they have had. Yeah.
And Marshalls East Africa is not featuring anywhere here, top gainers. Neither is it in the top losers. They have been in the news as well.
For Marshalls East Africa, I'd say there was an offer that was submitted, about 10.75 shillings, and only 4% of shareholders managed to convert their shares into the offer itself. But however, from 19th, there will be a capital gains tax for the shareholders who do not sell to the group that offered. And
let's talk about our top movers. Safaricom, 16 million shares. I mean, it's a huge number of shares, right?
Safaricom has actually become a juggernaut in this country. It's moving to levels that we have not yet seen it touch, and there is more that is expected from the company, especially conversion of the shares from Vodafone to Vodacom. It enables the company to be able to move into more markets in the African sector itself. So we might see that the revenues might actually grow if they manage to tap into different African markets, especially in the mobile money segment.
And Equity Bank, 5.4 million shares.
My view is that local investors are getting into the stocks right now as they have seen the uptick that has happened, and foreigners are actually taking profit off the stocks. Secondly would be that there has been a dip in the KCB stock, so anyone moving from a tier 1 bank would move most likely from KCB into Equity Bank itself. Yeah.
And finally, when we look at Mumias and Centum, who is buying, local or foreign investors?
For Centum, there was results that they released. The results were down, especially in terms of gains that they get from exits. For this year, they had a gain of roughly 1.5 million compared to 5 billion, 1.5 billion compared to 5 billion that they had the previous year. That is what has led to the decline in their profit after tax. And I would say that mostly it will be local investors getting into the stock.
Okay. Yeah. All right. Kase, thank you very much indeed for joining us here. Kasem Bao is a research analyst at Dye & Blair, helping us to digest the figures. This is the Trading Bell.
Thank you, Miriam Bishara, on your question on how the NSE determines companies in the NSE 20 share index. The NSE 20 share index is determined by the top 20 companies that meet the threshold of the exchange in terms of market liquidity, turnover, and market capitalization.
That's all for today. Thank you very much indeed for joining us. You have been watching the Trading Bell, of course, coming to you from the trading floor of Nairobi Securities Exchange, giving you everything about the stocks and the securities market. My name is O'Brien Kimani. Always we encourage you to get in touch with us. Our Facebook page is the Trading Bell TV show. Our Twitter handle is the Trading Bell. My Twitter handle is at O'Brien Kimani. Our SMS line is 22162. Always remember to start with the word BIZ. We'll see you again next Thursday, same time, right here on KBC Channel 1. Until then, as I always tell you, have yourself a profitable week ahead of you. Bye for now.